A lot of you spend a lot of money to impress people you will never meet with your car. And I've got some nice cars. I like cars. I'm a car boy. There's no question about that. But, man, when we were broke, we were driving. Well, start with I was driving a Jaguar, and then I went broke, and I sold it the day before they took it so that they didn't take it to avoid the repossession.
Hey there, welcome back to the Finance Zoo channel. If you've ever wondered why Americans often find themselves entangled in car loans, in that case, you're in for an enlightening discussion, as I'll delve deep into the factors contributing to this prevalent issue. So if you're thinking about financing a new set of wheels or want to understand the intricacies of car loans, you've come to the right place.
Now, if you've got enough money that you can throw $12,000 off the edge of a bridge and it not damage you, then you can afford to drive a car that expensive. But this idea that you can just, well, I can afford it, what most people mean when they say that is they think they can pay the payment if they keep their job. Well, let me help you with a new definition of I can afford it. I wrote a check and paid for it. That's the definition of I can afford it. If you can't pay for it in cash, in total, on the spot, cash on the barrelhead, you can't afford it.
Dave Ramsey's viewpoint on the American car loan predicament strongly aligns with my beliefs. His analogy of throwing $12,000 off a bridge to stress the importance of solid financial footing before significant purchases resonate with me. Ramsey points out that people often confuse their ability to manage monthly payments with true affordability. His idea of redefining affordability as the capacity to pay immediately with a check brings a significant shift, challenging the conventional mindset and underscoring the need for financial stability before committing to substantial expenses. Ramsey reminds you that financial security means covering the entire cost upfront, not just managing monthly payments. This fresh outlook prompts you to rethink your financial decisions and prioritize responsible planning. The growing number of American borrowers struggling with car payments, particularly among subprime borrowers, signals a concerning trend, with over 60-day delinquency rates rising by nearly 18% overall and 40% for subprime borrowers compared to last year. In 2023, the array of car ownership choices symbolizes freedom. However, escalating costs, with average monthly payments of $725 for new cars and $516 for used vehicles, and a mounting auto loan debt of $1.5 trillion, present significant challenges. Amid these rising expenses, concerns about rushed transactions and mistrust are rising. In the upcoming analysis, I will delve into the intricacies and examine the obstacles facing Americans with car loans, while also considering who can benefit from these insights.
That's what most people do, and most people are broke. If you stay out of car payments the rest of your life, it is one of the key elements, one of the key data points that indicates towards building wealth. The average car payment in America today is $507 a month over 84 months.
I agree with Dave Ramsey's take on car loans in America. Car payments can keep people broke and hinder wealth building. He's right that the average $507 monthly payment, if invested wisely, could lead to millions. Most successful millionaires avoid car loans, opting for ownership or saving up. Ramsey's advice to break free from car debt is wise, offering financial security and a better future. It's about making smart choices for long-term gain. When it comes to auto loans in America, it's important for you to grasp the basics. I've always believed in living within my means, especially when buying a car. Remember, a car aims to get you around reliably, not drain your wallet. Auto loans can be a double-edged sword. They help you afford a car up front, but can also lead to debt if you're not careful. Watch out for high interest rates and long loan terms. They can make your affordable monthly payment costly in the long run. Know your loan terms, interest rate, loan length, and extra fees. Higher interest means a pricier car. Try for shorter loans to save on interest. Your credit score matters too. It affects your rate. Keep an eye on your credit report for errors and work on boosting your score. Before committing, look at your budget. Be realistic about what you can comfortably pay each month. Make sure car payments fit your overall budget, leaving room for saving, investing, and other goals. In the end, understanding auto loans is about being a smart consumer. Consider the real cost, prioritize affordability over luxury, and set yourself up for a financially stable future.
Do whatever you want to do. But debt always seems easy until you have it. And then you start figuring out it's hard. Oh, it's not a big deal. I mean, if I could save $200 a month, why can't I pay a $200 payment? Just get the car now. That's it. But that's a very short-term thinking mentality. And the shorter term you think on things, the shorter your vision window is, the less likely you are to build wealth.
At first glance, saving money seems simple, but the real challenge emerges when you're faced with the choice. It's easy to think, why not just get the car now with a monthly payment? However, I've come to realize that this short-term mindset doesn't align with building wealth. The more I shifted my perspective to the long term, the clearer it becomes that instant gratification can hinder financial progress. It's a reminder that true wealth requires patience and making choices that align with broader goals. Market changes bring uncertainties like job losses and chip shortages that affect car production. Inflation is high. Many car loans come from non-bank finance firms, relying on short-term funding, especially during market ups and downs. Higher inflation and rates change things. In early 2023, new vehicle loan rates hit 15-year highs at 6.58%. Record car prices mean bigger loans at higher rates. U.S. auto loan debt doubled in a decade, hitting all-time highs. Younger generations are hit hard, with billions of dollars of Gen Z and millennial debt in severe trouble. As the Fed raises rates, getting cars and homes and staying financially stable is harder, with a higher risk of not paying back loans. Now let's talk about consumer protection for car loans. It's about fairness and clear rules. It stops trickery and hidden fees and ensures you know the loan details. It helps with problems and aims for safe borrowing. In 2022, the FTC suggested rules against unfair auto dealers, but things slowed in 2023 due to a government decision. Always be watchful and alert as things change. To tackle the challenges posed by car loans in America, there are several essential actions you should consider. Here are the key factors you need to be aware of. First factor, financial discipline. Stay aware. A clear understanding of your finances empowers you to make decisions in line with your financial goals. Prioritize savings. Putting saving and budgeting at the forefront lays the foundation for a robust financial situation. Choose wisely. Make informed spending choices to ensure your money is directed towards what truly matters to you. Second factor, patience. Cash first. Hold off on significant purchases until you can afford to pay in cash. This avoids the burden of loans and the accompanying interest. Better choices. Taking your time lets you thoroughly evaluate options, leading to decisions that align with your financial well-being. Prepare adequately. The wait allows you to be well prepared financially, preventing hasty choices that could lead to regrets. Third factor, financial literacy. Understand interest. Educating yourself about interest rates and borrowing costs gives you insight into the long-term impact of loans. Smart choices. Being knowledgeable about loan terms empowers you to make informed and beneficial choices. Decide confidently. Financial literacy equips you to navigate borrowing options confidently and make sound financial judgments. Fourth factor, exploring alternatives. Cut loan amounts. Opt for used cars to significantly decrease the loan burden, helping you manage your debt load better. Consider options. Explore alternatives such as carpooling or public transportation to minimize reliance on large car loans. Wise decisions. Assess whether car ownership is necessary and explore cost-effective transportation alternatives. Fifth factor, being informed. Smart decisions. Keeping up with interest rates and market trends ensures your choices are aligned with current financial realities. Know the risks. Understanding car loans' potential pros and cons helps you approach borrowing with clarity. No surprises. Staying informed reduces the chance of unexpected financial shocks linked to your car purchase. Sixth factor, adaptability. Flexible finances. Being open to adjusting transportation plans based on your financial situation adds flexibility to your budget. Smart changes. Adapting your transportation preferences can reduce reliance on loans and optimize your financial resources. Risk preparedness. Being adaptable acts as a safety net against potential financial stress, contributing to a more secure financial future for you. Americans face car loan issues due to shifting market dynamics, potential unfair practices, a lack of transparency, rising costs, and financial challenges affecting repayments. As you navigate car buying, shop around, understand your credit, and stay informed. Armed with knowledge, you can make decisions aligned with your financial goals. That concludes our discussion for today. Thank you for tuning in. I'm excited to hear your point of view. Please don't hesitate to share your thoughts in the comments section below. Stay connected for more thought-provoking content. If you enjoyed this, remember to give it a thumbs up, share it, and subscribe to my channel. Stay tuned for our upcoming videos. Until next time.